Hello everyone, it's Davide here and welcome back to Learning Finance. Today it's Sunday, weekend, the market is closed, so we have time to relax ourselves and to do some analysis, to look at some balance sheets. And I was also looking at the graph and asking myself what kind of possible scenarios we can have in the future of this market, okay? How can the situation evolves? What can happen? So I said, well, you know what, let's see and let's make a video about it, because probably it's interesting for people to, just to have in mind, just to be ready and be prepared to more than one scenario, okay? So leave me a like if you find this video interesting. It's very important for me to grow my channel, and subscribe to the channel, why not? And let's begin. So let's take a look. There are four of them. The first one is the best case scenario, and let's see it. So the best case scenario, as everyone knows, is what it's called the V shape. Okay, the V shape, it will be something like that. This is the Dow Jones Industrial Average. So it would be something like that. Okay, going up back again to touch the previous high of January and probably break them and continue to go higher. Now that would be the best case scenario. So we went down at the high speed and coming up at the high speed. I don't know what you think, but I think that this is not likely because of a lot of things, because of what's happening in the economy, because of high jobless claims rate, all those things. We don't know how bad we are going to be when the economy will start to open again. So I don't think that this best case scenario, first case scenario, is very likely. That's why in the previous video I told you that I was not buying anymore around those prices. Okay, I bought here, and now I was waiting with some cash aside and wait for more opportunities. So now let's take a look at the second scenario, which is kind of a normal one. For the second scenario, we can presume, which is called a sideways scenario. What that means is that basically from now we are gonna do probably the market is gonna do something like that. Okay, not higher, not lower, and just stay above those previous lows, but just taking some times and probably going back up again between 1 year, 2 years, something like that. So that would be a more slow recovery with a long period of sideways, where basically the market it doesn't go neither up or neither down. It's just taking some time to see how this thing is gonna play out, how the businesses they are gonna start to work again, how earnings are gonna be, how bad the situation is gonna be. This is something that it's like, taking time. Take some time for yourself. I don't know how it's gonna play out, and eventually after a while, after a period of sideways, start to ramp up again, as the market always did. Okay, so that's more of a normal scenario, sideways scenario. Probably someone is calling the U shape. It's a slow recovery, and that's it. Let's take a look now at the third scenario. So for this third scenario, I would like to show you which is the one that it's called the W shape recovery. Okay, so here we have the previous lows, and it could be something like that. So we had this bounce and we go back to test those previous lows, to form a sort of a double bottom, and eventually recover, okay, from that double bottom formation and go back up and go back up. Okay, so that would be the one that it's called a double, a V shape. Now, why V shape is just easy because of, you know, the shape itself. So recovery, go back to the previous lows, and boom, back up again, something like that. That would be the third scenario that we could have. Okay, the one a lot of people are talking about this scenario here. And the last one now, which is the worst case scenario. So to understand the worst case scenario, I have this green area right here, okay? Now, how did I took this green area? It's pretty simple. Now, right now, we did exactly a very similar negative performance, 38%, okay, 38% in the Dow Jones. Now, this is exactly very similar to the year 2000 crisis, because if we take from those highs to those lows, look at that. It's basically exactly the same here. We have a minus 38%, which is very similar to what we had in March. Now, the green area, it would be the worst case scenario in my opinion, and we have to take a look at this. This is the 2008 crisis, and we had a minus almost 54%. Okay, so in technically, that's what this green area is about, basically. It touches this resistance here, which is becoming a support in this case in technicals, and it would be let's take a look from those highs to those lows. It would be around very similar, minus 52, very similar to the 2008 crisis, okay, around more than 50%. So a similar scenario to the 2008 crisis. And let's also take a look at another thing, which is quite bad to see, but you know, we have to have in mind all the possible situations. So to understand the worst case scenario, guys, this is the crisis of 29, and look at what we had. We had a huge crash, which has been really fast as the one we had, and a bounce back. And look at what we had later on. Later on, we had this is in technical, this is a triangle, very similar, very, I mean, in an easy way. That's a triangle, which we went up as a retracement of this previous movement, and we broke the triangle, the downside, and we continued the trend on the downside. And we continued in this crisis the trend from the downside to find a bottom around 2 years later. Okay, so that would be the worst case scenario. And if we project this to nowadays, we would have something very similar: a very fast crash, a bounce back, and probably a triangle, which it looks like we had broke it, and that would be the worst case scenario. So a continuation of the downtrend for a very long time. So go back to the previous lows and break them and continue to go lower to eventually touch the green area that would be like a negative performance of around 50%, 54%, and bounce back from here. So start to ramp up again from those lows here. Okay, so that would be, in my opinion, the worst case scenario that we can have. Now, of course, I just do those things just to have an idea in mind, because I am an investor for the long run. So I like to look at balance sheets. I like fundamental analysis. I'm not the one that just do technical analysis to understand where the price is going to go tomorrow. But I think that sometimes it can be interesting to have an idea on different views, different scenarios for the long run, just to, just not to say the market is going to go up forever, just to have an idea, just to say, well, this could happen. That's why I did this video, because it can be interesting, especially on Sundays when the market is closed, just to, just talk a little bit about the markets. And in my opinion, what I do, I am not a magician. I don't know which one of those scenarios we are gonna have. What I did, I bought shares here, and now I keep some cash aside. I keep some cash aside, waiting for opportunities. So looking at fundamentals, looking at trying to find good businesses which are gonna be profitable in the futures, and buy them if I find that they are undervalued in the market. Okay. So leave me a comment and let me know which scenario do you think is more likely, and leave me a like if you find this video interesting, and subscribe to the channel. I wish you a wonderful day, guys. Bye.